Hey, what's up, everyone? Imagine this. You're scrolling through your feed, and bam! Silver just tanked 33% in a single day last week, wiping out billions in value. It peaked at over $121 an ounce, then crashed down to around $76. That's the kind of drop that makes headlines scream market meltdown. But hold up. While everyone else is freaking out, I'm sitting here thinking, this is your shot. Yeah, you heard me. That slam wasn't the end. It's the reset button for everyday folks like us to get in smart. Stick around, because I'm about to break down why silver's wild ride is actually handing you real opportunities to protect your wallet and build something lasting. Let's dive in. Look, life is expensive right now. Your grocery bill is up, gas is pinching, and that savings account? It's barely keeping up with inflation, which is still hanging around 3 to 4% even in 2026. Remember how last year's rate hikes made loans tougher? Mortgages, car payments, student debt? Now, with the Fed signaling potential shifts under new leadership, uncertainty is back. This makes the dollar stronger and puts pressure on everything from your 401k to your crypto holdings. Silver's recent slam ties right into this whole mess. When prices drop like that, it's not just traders losing sleep. It's hitting industrial stuff we all rely on. Solar panels for cheaper energy? They need silver. Your phone or that EV battery if you're going green? Silver's in there too. If prices stay this volatile, companies pass those costs on to us, meaning higher bills for tech and clean energy. But here's the kicker. This volatility is shaking out the speculators, leaving room for regular people to stack silver as a hedge against all this chaos. This isn't about getting rich quick, it's about not getting poorer slowly. All right, let's unpack what really happened with that silver slam and why it's not all doom and gloom. Picture silver like that one friend who parties hard and then crashes. Exciting, but unpredictable. Back in January of 2026, silver rocketed up 50% in just 1 month, hitting records over $120. This was driven by a massive hunger from industrial sectors. Solar alone gobbled up nearly 200 million ounces last year, a huge increase, as countries like the U.S. and China push for 700 gigawatts of new solar panels by 2030. Electronics and electric vehicles added another 310 million ounces of demand. Think about your smartphone's circuits or that Tesla battery. So total demand in 2025 was over 1.2 billion ounces. But the mine supply? It lagged behind at about 850 million ounces. That's a deficit for the 5th straight year, folks. Supply just can't keep up with demand. Then, boom, January 30th hits. Silver plunges 33% in a single session. Why, it was a perfect storm. Rumors of a more aggressive, hawkish Fed chair replacement spooked the markets. The dollar surged, up 2% that week, and leveraged traders got margin called, triggering a massive sell-off. But if you zoom out, this isn't new. Silver has always been the wild child. Half industrial metal, half monetary asset. In real life, it's like comparing your steady job, which is like gold, to doing gig work, which is like silver. It booms with tech trends, but can be unpredictable. Take my buddy Mike, a solar installer down in Texas. Last year, high silver prices jacked up panel costs by about 5%. But now, with this dip, he's seeing deals that could actually lower home energy bills for his customers. Or think about crypto. Bitcoin is volatile too, but silver has a physical backing. You can hold it in your hand. There are no hacks, just real metal. And what about stocks? The S&P is up 15% this year, but with some of the AI hype starting to cool down, silver's value is tied to real-world growth, like data centers needing silver for efficient wiring. The numbers don't lie. As of February 2nd, 2026, silver is trading around $79 to $81 an ounce, with gold at $4,521. That ratio of 59 is screaming bargain, especially if it compresses back down to the 40s like it has in past rallies. Industrial demand is projected to hit 750 to 800 million ounces by 2027, with solar and EVs leading the charge. And the deficit? Analysts like the Silver Institute are forecasting another 200 million ounce shortfall this year. It's not just hype, it's physics. We need silver for the green energy transition, and there simply isn't enough new mining to fill that gap quickly. So, what's the outlook for the next 6 to 12 months? I see silver stabilizing and then climbing back toward $100 by the middle of 2026. But it won't be a straight line up. There will be bumps. A key thing to watch is the March delivery on the COMEX exchange. That's when paper contracts have to be settled with real physical metal. With open interest so high, we could see a tightness in supply that pushes prices up. What are the risks? Well, if the dollar stays strong, say above 105 on the DXY index, or if the Fed surprises us with unexpected rate hikes, silver could dip to around $68 in the short term. But the opportunities shine much brighter. Lower prices right now mean a cheaper entry point for stacking physical silver. If that industrial demand stays hot, with global solar deployments up another 20%, that demand will pull prices higher. Think about it. In a world where electric vehicles hit 20% of all car sales and AI data centers are exploding, silver is your quiet play. This isn't about becoming a millionaire overnight. It's about steady growth that can beat inflation and the urgency. Delivery windows like the one in March could spark volatility. The smart move is to act before the next squeeze. So here's your practical checklist to turn this information into action. These are simple steps anyone can do, no fancy finance degree needed. First, assess your finances. Look at your budget and aim to allocate about 5 to 10% of your savings to silver. If you need to, skip that extra coffee run. Every little bit helps. Second, educate yourself quickly. Go read one free report from the Silver Institute on demand trends. It takes about 20 minutes, and it will empower you with knowledge. Third, buy physical first. Start with some coins or small bars from reputable dealers like APMEX. Aim to buy 10 or 20 ounces just to dip your toe in. The current price dip makes it much more affordable to start. Fourth, diversify smart. If you can, mix some gold in with your silver. But with the ratio at 59, silver is the better value play right now. You can also use ETFs like SLV for easy exposure without having to worry about storage. Fifth, watch the key price levels. Set alerts on your phone for 75s on the downside, which is a support level, and $90 on the upside, which is resistance. If it breaks up, you can add more. If it trends down, just hold steady. Sixth, hedge your everyday risks. Link your silver buying to your life goals. For example, you could be saving for a home solar setup where silver is a key component. This makes it more meaningful. Seventh, track your investment monthly. Review the prices and read the news just once a month. Use apps like Kitco for real-time data. This keeps you informed, not obsessed. And finally, build a community. Join a forum like Reddit's r/r Silverbugs. You can share stories and learn from other people's wins. It makes the journey more fun and keeps you accountable. This could straight up change your financial future if you jump in now. Don't wait for the next hype wave. These price slams are when the smart money loads up. You've got the tools, you've got the insight. Now go make it happen today. If this fired you up, smash that like button and drop a comment below. Did the recent slam scare you off, or did it pull you in? Be sure to subscribe for more Real Talk breakdowns and check the description for those bonus links to help you stay ahead. Let's turn this market noise into your win. Talk soon.